This conference will now be recorded.
All right. Good morning, everybody. This is Greg Morton. It is Sunday, July 25th, 2021. This is the weekend video update for Canslim growth stock investors via the Greenville Eastside IBD meetup group, as well as the Stockyard meetup group. As always, this is for educational purposes only, not recommending any stocks or securities to buy or sell. All investing has substantial risk of big losses. We want to learn first and only then invest. And of course, Canslim's a registered trademark of Investors Business Daily. So this weekend, we'll look at the M factor. Quite the week this past week and quite the week ahead. So we'll talk about both of those. Growth breakouts are maybe back in vogue. I'll mention the interview I did this week with Richard Moglin and then a list of our prior meetings. And we'll look at a few charts in there too. So of course, the M factor is the most important letter in Canslim. If we're wrong on the M, nothing else is going to be right. This has been a tough year because the M factor's been up and down and a little more trendless than either clearly down or clearly up. So it's been very different than 2020. So currently, per O'Neill and IBD, we look at three things to determine the market direction, and if the trend's in our favor, they go in this order of priority. Let's look at the action of leading stocks, the actions of stocks we own. So we'll look at the group teaching portfolio and the market pulse, distribution day count, price and volume on the indexes. And then of course I supplement that with my coloring book, which is an Excel spreadsheet. So let's go over to MarketSmith and we will look at the indexes, and then we'll also look at some other things. So let me get on the indexes, go to the NASDAQ daily. So here we are. This week, of course, we had a really brutal day on Monday, followed by 4 up days and closed the week at all-time closing highs. So this was really a little bit of a, I would say, surprise because we don't predict, but it was unexpected. We're down for 5 days in a row, and we had 4 days with nice closes and even finished with higher volume. Looks like on Tuesday as well as Friday. We're back above the moving average lines. They're stacked in the correct order. So the NASDAQ's looking good again. If we go to the S&P 500, see the same thing. All-time closing highs, 4 nice days after a terrible Monday, which came down and tested the 50-day. Moving averages lines are stacked in the correct order and moving up. NYSE, of course, this one's not as strong. It's been mired below the moving average lines, just now poking back above them. So maybe it'll make some progress. Dow, all-time closing high, moving average line stacked back in the correct order. And then the fly in the ointment is the small caps are still weak. So here we've got the 10 and 21 have crossed under the 50, struggling to even take back the lowest one, which is the 10-day RS line trending down. So we're seeing weakness there, as well as on the S&P 600. Looks very similar to the Russell 2000. So a lot of times the small caps will lead up as well as lead down. Currently, the other indexes, the NASDAQ is more tending to lead up right now is what it looks like. Maybe these drag the big boys down, but hopefully we're in a little better trend at the current time. So if we switch over to my Excel spreadsheet, a lot of flip-flops this week. Monday pretty much plunged everything to red. The Friday before, IBD had gone to yellow or uptrend under pressure, which is still an uptrend. The window of opportunity did not ever close. That column stayed green, had some clustering with distribution days in here. But by the end of this week, again, these flipped right back from red to green, skipping yellow on the NASDAQ and S&P 500. Those signals, they're really slower signals because to flip to green, you have to have the 10 up, the 21-day exponential up, and you have to be 1% or more above the 21-day moving average. So these flip-flop quickly, went green to red there, then red to green. The Dow came back, the NYSE is very close to moving back to yellow or green. I think maybe the 10-day moving average is still down is what kept it from changing. And then the Russell and the S&P 600 that we just looked at are bad. IBD flipped back to uptrend resumes on Friday, so it's back to green light condition. Also, the distributions day count stays because they did not go to in correction, and there was no follow through day because they're not looking for one, and we didn't have one. So distribution day count is still 4 on the NASDAQ. You can see the 4 in our 25-day window, 1, 2, 3, 4. And then the S&P 500 is still sort of elevated at 6, and I have 4 on the Dow. And I don't think we drop any this week due to age, but if the indexes keep going up, we may drop some due to the gain rule. And then if we look at this week, again, had a really bad Monday. I bolded it in red. But then right after that, things started improving. We had breakouts, Lululemon, Floor & Decor, HCA on Tuesday. I've got Floor & Decor in there twice. I'll have to look at that. Probably just one of those 2 days is right. Step, IPG, Chipotle had a gap up, not a breakout, but a gap up. Expel, Crocs gapped up. And then on Friday, Roku, Skechers, RHI, Snap all had strong days as the NASDAQ, S&P 500, and Dow hit all-time closing highs. And we did have increased volume, which for a Friday during the summer is a little bit rare. I think it was still below average, but it was an increase. So that was a nice day. So let's go back to the presentation. So we looked at all those things. So some general notes. Weekend routine is still showing, better watch list candidates in the growth sectors. Recent breakouts are acting better. There's new breakouts that we just looked at the coloring book. Some select IPOs are acting well. MTS flipped to green like we looked at on several indexes. And then the buy sell day count was improving. I forgot to mention that, but that was the second column on the coloring book. And I think we have still like 9 selling days and 8 buying days. So maybe that's getting ready to flip back. If we get some more buying days, that will improve also. So overall, it's still a little difficult, still a workers market. Make sure you're doing a weather report, not a weather forecast when you study the M factor. No ways to really predict the future. And of course, as I said, it's kind of like driving. We've talked about that for 3 weekends now. Are we easy on the gas, easy on the brakes, or coasting? It's not hard on the brakes and not hard on the gas yet. Let's not pedal to the metal and don't lock down the brakes. I think this past week we moved more toward light accelerator, sort of wading back in. So last weekend, I said it was a hard penny, seller controlled, distribution dominant tape. And then we had that ugly Monday. This weekend, I would say sort of caught optimistic. The week ahead is going to be very important. We're going to look at those factors in just a second. Secondary indicators, there's still a lot of bullishness, which can be negative when everybody's positive. Still have a relatively low put call ratio. IPOs are still gone wild. 5-year record high percentage wise over the last year of new issues on the NYSE. I think it's up to 16 point something percent. And then the indexes, as I pointed out on IBD Live, are right back to extended territory above the 50-day. And that's when we've seen these pullbacks. So the Qs, for example, are 6.7% above the 50-day. So those are some indicators which are secondary. So they're not as important, but still sort of keep an eye on them. And that's why it's not hard on the gas. These things are still wading back in, sort of thing. Then here's the new high list in the paper over the weekend. Ponds that may be good to fish in. Medical, obviously strong. Some retail. So you got Lululemon, Chipotle, Floor & Decor. Target has been a great winner. So strong names in there. Software is coming back, so we like seeing that. So just good to look at. A little bit of business services, internet, there's the big boys. They've been acting well. Snap, we already saw. So good list to look at. Some stocks out of basis, stocks pulling back to the 10-week are highlighted there. So the week ahead, roller coaster's coming. There's a lot of stuff on the docket. So we've got a massive EPS week with lots of big boys, big names on tap. So there may be viable opportunities as well as obviously the stocks we own, because there's many in the group teaching portfolio that will have earnings dates this week. I'll pull that up in just a second. IPOs are still gone wild. We have 18 more new ones this week after 20 last week. We have a Fed meeting this week. So who knows what Jay Powell will say. That'll be Wednesday at 2:00 p.m. Eastern. And then Friday is Fossil Day. If you're not familiar with that, that's my acronym for Bill O'Neill Day. This is not in the books, but I have it on good authority. He covered this in one of the advanced master's class workshops. So at least at one time, he would review his portfolio on the last trading Friday of the month, which will be this Friday, and he would want to hold no more than one losing position. So it's sort of it's a portfolio management rule. Sort of keeps you from pulling the flowers and watering the weeds. So I like it. I pay attention to it. The group teaching portfolio lets me know at any time how many losing positions I have. Again, it's not in any of his books or the webinars, but I did get it on good authority from secondhand through somebody that was at that, or third hand through somebody that was at that master's class where he talked about that many, many years ago. So let me exit. Let's pull up, oops, sorry, group teaching portfolio. I forgot to go to that. So here's where it is currently. We have lots of earning dates this week. I should have flipped those to red, but those are all confirmed with press releases, except FIGS hadn't put out anything yet. So that's just still an estimate. So here was the bad Monday. Then we had 4 strong days, back to sort of flat for the month. For the year, it's improved. We're up 11.8%. Currently 70% invested, no margin used. So you can see what earnings reports and have to check and see how the cushions are with regard to those. So we covered that. Here's the earnings calendar off of Earnings Whisper, so you can just see how hot and heavy things are. You know, Tuesday, 140, 816, close to 250 on Wednesday, over 300 on Thursday. And then Fridays, it's rare there'd be anything after the close, so I don't know what that is. But again, big earnings week. So let's look at a couple charts. Go over to MarketSmith, sort of weekend update, just some random ones I have in here. So Generac continues to work well. That's a breakout that worked, triggered the power from pivot that deals with the 8-week hold exception. And I have a video on that explaining that it's more than just that green flag triggering. So you may want to watch that as I give a lot of details on that. You could decide if that rule properly triggered or not. But that one's done well. NVIDIA just had that big split, so it did hit the profit goal. Would have been fine to take profits. We'll see if it acts like Apple and Tesla after their big splits, which sort of went sideways for a while and down, or if it continues up. Dexcom, this is one that does not have Canslim earnings and sales, a little more of a turnaround. Friday went to an all-time closing high, sort of Dr. Wish's green line breakout, has earnings this week. We have that one in the group teaching portfolio. This one also in the group teaching portfolio, so it looks like it'll have enough cushion to hold through earnings. I'll go back to Dexcom for a minute. Yeah, so it's been 1, 2, 3, 4, 5, 6. Yeah, 10 weeks up in a row. So it's just showing some quiet institutional accumulation. RS line's improving, has a year-long base, so the RS line can be weaker when you have a base that long, and that can be okay. And then the couple from this week, so Snap, if we go to that daily chart, massive gap up, massive volume up 23.8% on 577% volume. gapped right into the blue zone. This looks like the first Facebook gap a little bit. I think Facebook was up like close to 30% on massive volume like that. So we'll be interested if that one can hold. That will be nice. Twitter, MarketSmith shows this as a consolidation, but you really got a double bottom in there. So it's coming back near this double bottom, maybe even an early entry off that little shelf. I did put it in the group teaching portfolio based on that. So we'll see how that one works out. So that's a few charts. Go back over here. So here was what we covered at our big July meeting. I walked you through the newspaper page by page, how to use it in a weekend review. And then we went over EPS season and looked at the buyable gap up setups and rules that one could use within Canslim if that's something that's in your rule set and you're willing to try those. Those are for more experienced investors as they're more volatile. You have to be very disciplined on your exits. So that's what we covered at the July meeting. I've scheduled the August meeting on the Stockyard Meetup site. So if you've never attended one of our meetings, if you register for the August meeting, I see a courtesy copy of the July meeting. And then here is my YouTube page. So there's the 8-week hold ROI exception as I explained in the video. And of course, if you're watching this weekend update through a link there. So go to his YouTube page or Twitter and follow that. This does show the importance of having the camera. Obviously, when you watch the interview, he and I are actually the same age, and obviously I just look a whole lot older, like twice his age. So I guess I need to get one of those young people camera to help move on that. So that's it. Questions, contact information. Here's my 2 meetup sites, Greenville Eastside IBD meetup. The Stockyard is where I coordinate online meetings. There's a lot of resources for Canslim investors on the Greenville Eastside site. If you're interested in prior recordings, you can email me. If you want to sign up for the August meeting, you go to the Stockyard meetup site and RSVP there and pay the $10 tuition as part of the RSVP process. Everybody can attend live if they want to.